Thank you all for standing by, and welcome to today's conference call. All lines are on listen only for today's conference, and our conference is being recorded, and if you have any objections, you may disconnect at this time. I will now turn the conference over to our host, Mr. Andrew McCaskill. Sir, you may proceed.
Thank you so much, Jill. Good morning, everyone. This is Andrew McCaskill, Senior Vice President and Group Director at William Mills Agency in Atlanta. I'm super excited to talk to you this morning and to be hosting our conference call to launch mobile wallet initiative CU Wallet. With me today, I have CEO and founder and co-founder of CU Wallet, Paul Fiore, as well as he is also joined by Paul Parrish, Executive Vice President, Chief Financial Officer for One Nevada Credit Union. What I want the gentlemen to do today is talk to you about this initiative, to talk to you about why now, to talk to you about what this brings to the credit union industry. And what I'd like to do right now is to turn it over to you, Paul Fiore, and talk a little bit about those things. Can you help us talk to us just about what CU Wallet is and why now?
Sure, absolutely. Welcome, everyone. Thank you, Andrew. I'll cover what is CU Wallet, why it's important, how it'll be structured, who's involved, and how it'll work. And I realize anyone who's been to a mobile venture, or especially those of you on the call from the press that have covered mobile payment technologies, notice the plethora of initiatives that are out there. So I'll address what's unique and different about this and why collectively credit unions could play in this field and make an impact. So first, what is CU Wallet? It's a way for credit unions to actively participate in the new mobile ecosystem. Historically, waiting for third parties and other vendors to bring a solution to market forces the credit union to deliver a product that others have an agenda to deliver. And at CU Wallet, we believe that credit unions coming together could have a solution that's unique for our industry. It's also a way for merchants to directly reach millions of members without third-party brands that are seeking a consumer brand to attract a consumer for their purposes, whether it's for marketing purposes or payment purposes. And a key strategy is that the mobile transaction, if initiated, could either come from a merchant's mobile payment system or a credit union's existing mobile banking app. The key differentiator is aggregated industry volume. That allows credit unions to preserve the central account positioning it has with its members and the payment positioning with merchants and billers. The venture is established to research, select, and invest in key mobile technologies that enable credit unions to fully serve members, participate in new revenue opportunities, and do so within their own branded mobile banking environment. And because of the collective approach, allows for sharing secure, flexible, and a cost-effective platform. So why is it important and why now? We believe credit unions are uniquely qualified to protect and enhance the financial interests of their members. We're coming under increasing pressure from third-party brands, and as I mentioned, these are consumer brands. And I think at the end, I'll share, maybe as part of the Q&A, my personal take and from experience from Digital Insight with some of the third parties that were in the market serving financial institutions and why that was successful. I think credit unions have a relationship and trust with their members, and also they hold the deposits, a key relationship. There are mobile initiatives that have some balances, whether it's a stored value product or whether it's a new payment system. But financial institutions in general and credit unions in particular have that relationship with the member and have recurring deposits through direct deposit that is something that's very interesting for the merchants as they attract spend. Credit unions also desire to attract younger members, as almost every credit union today measures and tracks the average age of membership and realizes that even though the account relationship they have with members is a very sticky relationship, it's core and key to this to attract the new millennials and people that are mobile natives. And we believe that credit unions collectively have that critical mass with 90 million members and $1 trillion in assets to impact the payments landscape positively. So how will CU Wallet be structured? Well, all the initial startup capital was provided by myself and the founding team. There's no outside capital. The QSO structure will soon follow, where the credit unions will own a majority and control the majority of the CU Wallet venture. Today there are 15 participating credit unions, and that number is increasing each day. And we also as a QSO structure, will not only take investment from individual credit unions, but also from QSO serving the financial credit union industry. The vision is to have the best of the credit union cooperative ethos, the ability for credit unions to work together as an industry, with the best of an entrepreneurial culture and professional management. So who is involved? As I mentioned, a diverse group of credit unions, diverse by not just geography and asset size, but by core systems, by mobile banking, mobile payment, and other and mobile initiatives that they're rolling out. And the first person we've asked to join the team came from Fiserv for 18 years is Chris Odie. Chris is running sales for credit unions for CU Wallet. Very happy to have him on board. In addition to having a long experience selling core systems and other technologies for credit unions, he happens to also be on the board of directors of a credit union here locally in his hometown. Kirk Drake, who's also joined me on the call, is my co-founder in this venture, and Kirk and I started back in October of last year discussing what a mobile wallet initiatives would look like. At the time, I was working on two mobile initiatives as CEO of a company called Tabbed Out in Austin, Texas, that provided mobile payment services to thousands of hospitality venues. And also I was founder of a company in Los Angeles called Double Beam, which provides mobile payment systems for other industries, including the grocery industry. And Kirk was telling me about his company, Ongoing Operations, which hosts many credit unions, but also several initiatives for technology for credit unions, and talked about what it would look like instead of approaching it from the merchant perspective, to approach it from the consumer and the member perspective on behalf of credit unions. And that's how it initially got going. We met with a handful of credit unions at the GAC conference in February, and had the green light from individual credit unions to go further to investigate, and that led us to where we are today. Of course, the other key component, Paul Parrish is on the line and he'll speak soon, is that credit unions and credit union leaders will join CU Wallet as not only board members, but also to provide significant product direction and active participation in the venture. So how will it work? We're not seeking to build a system from scratch. Our goal is to identify robust in-market solutions and white label them and tailor them for the needs of credit unions. Most people know the high dollar amount in the hundreds of millions for vendors and groups that started early in mobile payment before consumer adoption really started. And our mission is not to invest credit union millions of dollars in building a new technology, but taking a product that's already on market and customizing and tailoring it for our needs. We also seek to partner with existing credit union core systems and credit union mobile banking providers. We don't believe the member is going to want to download two apps from their credit union, one for banking, one for payment. We see integrating it into one experience and having that work both in the consumer app for the credit union's payment system or in the merchant app in an open environment is going to be critical. We also would like to leverage the national and local merchants on behalf of credit unions to provide them a solution to directly access those members' accounts in a cloud environment. We believe that most mobile payment systems, if you look at what the merchant really wants, what they really want is access to the consumer and their deposit, but also a fair settlement system with fair pricing and reflective of the new technologies that enable you through mobile to lower your risk, lower fraud, lower chargeback risk, and not having as many third-party intermediaries in that equation helps lower that cost. The goals of credit unions, of course, as I mentioned, to attract younger members and to serve their tech-savvy members. They also want to prepare for the new interchange reality and participate in new revenue streams that focus on value-added services. Credit unions don't simply want to be in the business of posting a debit to an account in a commoditized transaction. We want to control our own destiny and discourage regional efforts or other wallet initiatives, and instead have CU Wallet focus on a national effort to bring credit unions into the fold for this venture. With that, I'm going to turn it back to Andrew, and there'll be some other points we could cover in the Q&A.
Sure. Thanks, Paul. So, Paul Parrish, can you, as the Executive Vice President, Chief Financial Officer of One Nevada Credit Union, can you give us a little bit of perspective in terms of, what the importance of an initiative like CU Wallet is for the credit union industry?
Thanks, Andrew. I think the way we're looking at it, at least from the credit union's perspective, is there's two issues that we need to be laser focused on at this point. The first is that our current level of interchange income has been steadily diminishing, and debit interchange income is very important to us. It makes up right now. It makes up about 15% of our total revenue, which is a pretty substantial chunk. We may be a little bit unique in the credit union space, looking at just that one ratio, because we've got some pretty good penetration with our debit card usage. It's just been a big part of our strategy over the last several years. Just in the last 12 months, we've had to grow our transaction volume almost 10% just to be able to tread water with our interchange income, and that's a trend that we think is going to continue, and we think it's going to continue at an increasing rate. Right now, the merchants, all of them out there, are just kind of scrambling around, moving quickly toward methods to lower their costs, and a lot of those methods at this point are culminating in an ACH transaction that's coming through here, as opposed to using the traditional rails that's going to make us just our regular level of interchange. You've got Visa out there and eventually MasterCard too, trying to cozy up with the merchants, and the resulting deals that they're making out there right now aren't good for us in the long run. In terms of it's just going to continue to sort of peck away at that amount of interchange income that we're earning on an annual basis. You've also got non-bank entrants. Probably the best example at this point is PayPal. They've invested a lot of money over the past few years, and we're starting to see the results of it at this point. If you analyze the transaction volume in a credit union, and we've done that here, over the past several decades, if you looked at our ACH counts, normally the local utilities are going to be kind of at the top of the list in terms of the number of transactions that are being done through One Nevada through ACH, in terms of ACH debits coming through here. But over the last 6 months, maybe over the last year, PayPal has kind of hopped up on top of that list, and so our members are, whether they know it or not, they're either converting or being converted away from the traditional payment rails, and those transactions are being settled directly through their checking account data, which really doesn't make us any money. So we've got a very big concern about what's going on with our interchange income right now, and we think, and this is a discussion we're going to be having with our board here shortly at our next planning meeting coming up. We think that we're going to have to grow transaction volume by another 20% over the next 18 months if we're going to tread water with interchange, and we've worked our tails off, I think, over the last year just to garner that 10% increase, and looking at a 20% increase is a pretty daunting task. I don't know if we're up for it, but there's no doubt in our mind, and I think the credit union industry hopefully is starting to wake up to this, that interchange income is diminishing as a result of these trends that are going on out there. Number two, if you look at the currently available e-wallet solutions that are out there right now, we don't think any of them are, they're either not ready or they're not in our best interest, in terms of One Nevada's best interest in the long run. And then all of them at this point don't allow us to control our data's destiny, if you want to put it that way. Probably the best example there right now, I think, is Google. We've got members that are actually loading up that app at this point. Even though it's not all that widely used out there, and the merchants are kind of still in control over the acceptance of that technology, it's out there, it's ready, and our members are starting to sort of mess around with it at this point. And on the surface, you'd look at Google Wallet, and you'd think that that's relatively harmless. If they just load up the app, the first thing they're probably going to do is load One Nevada's debit card info in there, or our credit card info in there, and what's wrong with that? It's just a more convenient way for them to access those rails, and it shouldn't impact our interchange going forward. But the problem with it, I think, is more long-term in nature, and it has a direct impact on member loyalty as we move along here, because we don't have any control over what's going on. Google has kind of inserted themselves between us and the merchant, and I think going forward, our member is going to be sort of pecked away at in terms of maybe offers coming from competitors. Next thing you know, they're going to see something coming in from Citibank. Maybe Google's got an arrangement with Citi or with Quicken Loans, or you just pick the competitor. But our member is going to be getting peppered with competing offers out there that we just have no control over. And so in the long run, we think that member loyalty is at stake here. Even though Google Wallet looks relatively harmless on the front end, we think in the long term, we just don't like the idea of our members being yanked at, and we don't have any control over the competitive aspects of that. That could be very damaging going forward. So if we have a chance to offer our members a credit union-centric e-wallet option at this point, that'll be as good or probably even better than what's out there right now, and then also be able to control the destiny of our data,